Hey, it's Blake here. Forex Money Flipper. And with 10 Talents Trading. I got some rules on the board here. Okay? And I want you to we're going to make this video here. So, my trading rules. Okay? So I went ahead and just wrote them out. Number one, wait for trades to come to you. And by you, I mean me. But yeah, you can do what you want. So anyways, I'm back to drinking these Rockstar. I just had the first one today. For a while, I had not been drinking them for like 2 months or something, or a month. But anyways, I do enjoy drinking them. Okay, wait for the trades to come to you. You know, and that is a mindset, and that is something that you know, traders have got to get out of the eager mindset. Traders have got to get out of the eager mindset, and the mindset that says, you know, hey, I'm going to make a lot of money today, and it's all about money, and that's not. I don't even want to speak those words because that is not the right mindset. The right mindset, we're going to get to it. By the end of this video, we'll have established the right mindset. So, anyway, let the trades come to you. If you talk to good traders, people who have money and nice cars and are living the life, you'll hear them say things like, I sit back and watch and wait. And it's just something that's the good really good traders do. So anyways, yeah, it's a mindset. So it's about you know, marking up the charts for areas of high probability, right, where you can get a really good risk reward, and or there's a great chance of growing your money. Like we talked about, we are money farmers. We plant and looking for fertile soil to plant our money in to grow it. So, okay, number two, always use a trailing stop. Why? Well, it should be obvious if you know what a trailing stop is, simply because a market can continue to run. For example, you know, let's say you have a major key level, like whatever, I don't know, 1.110000 or whatever. Anyway, let's say it's a major level, right? You could say set your take profit at a certain distance from that key level, thinking that, okay, it's going to probably hit that key level or come close to it or whatever, right? Okay, but let's say how many, I can't even tell you, I haven't been tracking it, but it's been, what'll happen is a lot of times it'll just go right through, right? So maybe you'll set your take profit for like 50 pips above the key level, or 50, whatever, I don't know, 50 points, yeah, 50 points, and then it'll just go, and it'll like just keep going, right? So if you had been setting a trailing stop, and this works better with going with the trend, but then you're going to be getting more profits, right? So a lot of really good traders don't use take profits, they use trailing stops instead. Okay? But I know I've talked a lot about take profits in the past, but things change, people change, traders change. Hey, it's change or die, you know? Adapt or die, right? So anyways, okay, so we have wait for trades to come to you. It's a mindset. Always use a trailing stop. That's a strategy, technique, procedure, whatever. Okay, so that's also sort of a mindset. Letting your winners run, right? Cutting your losers. You hear that all the time. That's how you can do that. So number three, risk only 10% or less. So if you're using a $10 account, your stop loss um, should be no more than $1 per trade. Okay, so you know, you say you set it at 100-point stop loss. It's good to think about this before you take the trade, because then you can say, all right, well, where, you know, do I wait for them to look to see if they take liquidity, put my stop, you know, far enough down, and you can try to do all that and stuff like that and do whatever. But the point is, don't be risking more than 10%, right? So if a $100 account, you don't risk more than $10 per trade. Really, for a $100 account, man, 10, I don't know. I do more risk with a smaller account, like $10, just because, come on, you know. But like with a $100 account, I might even lower that to like 5%, right? And the more money you have in there, I'll probably continue to lower that, just because I just, for right now, unless you have a lot of money, then you know, it's all based on like where you're at, right? So if for you, if $100 is a lot of money for you, then yeah, do like 5%, right? But if you know you're doing $10, I mean, you know, 10%, you know, it's just a cool way to put $10 in and then make $10 and then make another $10 and build that up to 100 and then that and all that and keep going. But so anyway, so use 10% or less. That's why I put less, because sometimes you want to use, you know, 5%, or you know, you hear people say 1%, whatever. Some people say 2%, some people say 2.5, whatever. Anyway, use number 4. Use no less than a 1 to 4 risk reward ratio. You know, it's just it's also a mindset to say that you know, I don't take high risk trades, right? I take low risk trades. I take high probability trades, okay, and I take low risk or high risk to reward ratio trades. You know, so 1 to 4 or better, but no less than 1 to 4, right? Okay, so this is my trading rules. I just wrote these on here. I just made them up. But I've been having them in my heart and my head and that. But yeah, and this is from also experience too, and observation of good traders and what they do. People who actually make money, who actually have proof to show it, and they're not just bull crapping, and they're not about that, right? So I'm not talking about the people who are about that show. I'm talking about people who are just, you know, it's just kind of obvious. They just have money and they're not trying to like show off like that, you know. But some people do show off, but they have it. You can, and some people, you know, may be scammers and that, but you can, you know, real recognize real, right? So you can tell. Anyways, all right. Do not increase risk by moving stop loss. So it's like, don't move the stop loss away from price, right? So, you know, if you're selling and then the market, you know, starts to come back, don't move your stop loss and hoping it's going to turn around, and then move it and hope it's going to turn around, right? So a way to say that in words is, do not increase risk by moving stop loss, right? If anything, you want to decrease your risk, which means if you sell and the price goes down, then you can move your stop loss down, you know, but don't move it back up. If the price starts coming up, don't keep moving it thinking it's going to turn around, because then you just lost all your profits, right? And so that's just not a smart way to go. Just let your stop loss, wherever you set it initially for a sell, just leave it. And if it hits it, it hits it. But if it goes down, then you can move it to a support area. You know, like say it had a correction there, then you move it there, right? And so it may come back up and test, retest, and then go back down, right? Does that make sense? I don't have room to draw on the board. Maybe another video. Okay. So, do not increase risk by moving stop loss. Hopefully that makes sense. Okay. Some people just say, well, don't move your stop loss, but that is not a very comprehensive and complete way to explain it. So anyways, all right. Do not get greedy. Do not get greedy. Take what the market gives you. You know, there's a problem that I had where, you know, like a lot of people have, is being sort of grandiose or greedy, or thinking like being too hungry, right? For money, profits, whatever, a big move, you know, and that. So thinking, well, I can get more. There's more meat on the bone. There's got to be more meat to this trade, right? Well, if the market starts pulling back and that, there's sometimes a tendency to, some people move their stop loss thinking that the move is going to be a big move, but they're just, the market's just kind of not ready to go down yet and that. And so, but the thing is, you could always be wrong. So if you do catch pips, okay, catch those pips, right? And don't get greedy. And if it starts turning around at the place that you thought it was going to turn around, you see, and you're thinking, well, maybe this is just a temporary, and it'll go back down in that. Come on, man. Like, if you're expecting the market to turn around there, you can bet there's thousands, or I don't know how many traders there are, maybe millions, who probably like Euro USD, something like that. There's a lot of money looking at those spots that you're looking at, right? Key levels, trend lines, and that, and all this and the other thing. So, if the market starts turning around at the spot, say you had whatever, you're on a $10 account, you had $10 profit, the market starts turning around, now you got $7.50. Well, you don't want to take that $7.50 because you had 10. You're waiting for it to go back to $8.50. You're like, well, I'll take $8.50, or well, wait till it goes back to 9, right? Oh, now it's at $6.50. Oh, wait till it goes back to $7.50. I'll take $7.50 now. I'll take 8. I'll take less. Oh, now it's gone to 4. Oh, but I can't take 4. So let me wait till it goes back to 6. Oh, now it's at 3. Oh, well, let me wait till it goes back to 4.5. I'll take 5. Okay, I'll take 4. Oh, no, I'll take $3.50. Oh, now it's at 1. Now it's at 2. Oh no. Okay, well, just give me 3. Just give me 3. Oh, wait. Now it's at 50 cents. Oh, now it's a negative. Oh, let me just go positive. Let me just get out of the positive. Let me just not get a loss. I just don't want to get red. I just want to get blue. See? Here, don't be an idiot, man. Look, take that money when it's on the table. Take the money when it's on the table. Okay? And don't be greedy. And if it starts turning around, accept less. Less is more, right? Less is something, you see? Because if you don't take it, the market will. You see what I'm saying? If you don't take it, somebody's going to take it. You know what I'm saying? If you don't take that money that's on the table, there's a lot of players on the Forex. Somebody's going to take it, okay? And then instead of you getting their money, unfortunately, it would be them getting your money, you see? So don't get greedy, okay? Take what the market gives you, okay? So, miss a trade rather than take a bad entry. Miss a trade rather than take a bad entry. Okay, another way to say that is no entry is better than a bad entry. Okay, no entry is better than a bad entry. Okay, and then further elaborating on this point, it's more important to obey rules than to make money in the long run. You see? Because you could break one of these rules and potentially you could get lucky or get in a trade or whatever. You know what I'm saying? So you didn't wait for the trade to come to you. The trade was already running. So you get in and maybe you get lucky, right? Maybe you can make that work. Maybe you can make that happen. But you broke your rules. And over time, rule breakers get broke. Rule breakers break. Rule breakers get broken. Rule breakers end up broken, and all that, and broke. And so the fact is, it's better. You see what I'm saying? Because there's a saying in the military. I was never in the military, but I was around that culture. My dad was in the military and that. But I learned a lot about it. But there's a saying that goes. You'll hear some people say. Within that community, I would rather have grade A men with, grade C equipment than grade C men with grade A equipment, right? So in other words, I would rather have good men with bad equipment rather than bad men with good equipment, right? And you say, well, how about just, good men with good equipment? Listen to the video. Okay, so I would rather have basically somebody. I would rather be somebody, right, who follows trading rules rather than somebody who just made a killing one day because they don't have any rules and just anything goes, and so they made a lot of money one day, and then the next day because they don't either they don't have any rules or they don't follow the rules or they're not a solid rule follower, then they lose it all because they have no rules. They have no structure, they have no character, they have no integrity, and specifically right when it comes to trading, right? So the trading rules are designed, right, to make us into better traders, right? And so we have to get away from the idea that it's about making money, right? Because any idiot, any monkey, or stupid, that's a bad analogy, but any, anybody, a 2-year-old can click a mouse button, click to buy and sell and get lucky, right? One time, or maybe whatever, but I'm just saying, but and anybody can just go in and start trading, but it takes a lot to, it's more rare to find somebody who follows a strict set of rules than it is somebody who's just like, oh yeah, I'm gonna go make a lot of money. Okay, there's a lot of people like that. A lot of people, they go play the lottery, they go do whatever, they go to Las Vegas and that, and they say, well, I'm gonna make all this money in that. But so anyway, you get my point. Is that okay? It's not about the money. It's about being a good trader, right? What makes a good trader? Somebody who follows rules, right? Because here's the thing. Remember, I've always said this. If y'all saw any of some of my older videos that I made before, you'll hear me say a lot, and I'll probably continue saying this in the future too. Is you got to ask yourself, am I somebody I would give money to, right? And so, if somebody doesn't have any rules, if somebody is just a willy-nilly Wild West gunslinger of a trader, I like Wild West movies and the Wild West gunslingers and all that. But when it comes to finances and trading, when dealing with risk and all that, you want somebody who's solid, right? Who's got rules that is just not going to blow all your money in one day, right? I mean, how many of y'all have blown your account in one day? Over and 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 over. I've blown accounts. I've blown multiple accounts a day. Because I've always been a Wild West gunslinger. Okay, never had rules. Today's the first day that I'm getting these rules. Now, obviously, these were in my head, but there's something about writing them down, committing them to memory, practicing them, adhering to them, and this is why I said it's better to miss a trade rather than to take a bad entry. So the rule is miss a trade rather than take a bad entry. No entry is better than a bad entry. It's more important to obey rules than to make money in the long run. This is actually a biblical concept because Jesus Christ of Nazareth said it's better to obey rather than sacrifice. It's in the Bible. It might not be a direct quote from Jesus, but Jesus is the Word, and the Word is God. And so anyways, but it's in the Bible. It says obedience is better than sacrifice. That's what happened to King Saul. That's why he ended up losing the kingship, and the kingdom was ripped out of his hand and given to David, from David and Goliath. All right, so let's so it's better to obey rules rather than to make money, right? Because it's not all about money. The Bible says the love of money is the root of all evil. Okay, so let's not love money. We can like it. We should like it, right? Because how are we going to make it if we don't like it? Why are we going to work for it if we don't like it, right? So we can like it, but we should not love it. Talking about money. All right, quick quick review, my trading rules. Wait for trades to come to you. That's a mindset. Okay? Sit back, mark up your charts, look at different currency pairs, and look for opportunities in the market. Look for rich soil to plant your money where it has the best chance to grow, right? So always use a trailing stop. Okay? So you're letting your winning trades run, and because you're following rule number 5, you're cutting your losses small because you're not moving your stop loss away from price. You see what I'm saying? So you're moving it, if anything, towards price. And we're talking about in a sell here. If anything, you're moving it towards price and you're not moving it back up. So if it hits, okay, you have it here. If it hits, it hits. If you move it down, if it hits, it hits. If you move it down, if it hits, it hits. Okay, so you're minimizing you're cutting your losses quickly, and because you're using a trailing stop, you are letting your winners run. Okay, so now there's certain areas in the chart where you want to use a tighter trailing stop than others, and so kind of got to figure that out on your own, where you might set them, when you might tighten it up. When it comes to points in the chart where the reversal is highly likely or anticipated, and if you're anticipating it, then you can bet that there's millions of other people anticipating it as well, so they'll be getting out of their positions, reversing their positions, right, liquidating their sells or their shorts, and then possibly going long, buying. All right, well, anyway, so wait for trades to come to you. Always use a trailing stop. Risk only 10% or less. Use no less than a 1-to-4 risk to reward ratio. Do not increase risk by moving stop loss. Do not get greedy. Take what the market gives you. Miss a trade rather than take a bad entry. No entry is better than a bad entry. It is more important to obey rules than to make money in the long run. Okay? The market is going to do what it's going to do. It's going to move how it's going to move. And it's our job to be agile and nimble and accept what the market gives us, accept the entries that it gives us, accept the amount of money that it gives us, right? So we have to kill our expectations or just not have them, right? And so therefore we're not saying, see, this is why I keep saying it's not about the money. It can't be about the money. Don't make it about the money. Forget about the money, okay? Because, or pips either. So you're not saying, oh, I'm going to make this much money, or oh, I'm going to make this many pips. Okay, forget that. It's not about that, okay? It's about being a solid trader that obeys trading rules and has character and integrity and is just solid and predictable in the sense that you begin to trust yourself, right? You begin to, because you have a track record, because you have rules, then you develop a track record of performance, and then so anyway, and and then it's just like also too, when these things become automatic, right? Oh wow, then you're really, you're freed up to really, think about, okay, what are all these different markets doing, right? Instead of, what are my trading rules? Well, you know what? And if you don't have any trading rules, then you're really, really, really up the creek without a paddle. You know that, I like that movie, Without a Paddle. That's a good movie. I enjoy that movie. D.B. Cooper, and they go searching for all that, but it's I think they searched for it. But yeah. So, anyways, it's been a while since I've seen it, but yeah. So you're up the creek without a paddle if you don't have any rules, because then you're like, well, what am I gonna do? Well, what am I doing? Well, I don't know. Well, this is chaos. Well, it's the Wild West. Well, what's going on? I don't know. Well, and I'm just telling you, the market will toss you and turn you and pick you up and throw you around, and the waves are crashing, and it's just chaos, and madness and like the, you know, if somebody goes into the market without a plan, without rules, they're gonna get pwned, as they used to say. Pwned. You know, back in the day they used to say that as internet slang. But you know, yeah. So you know, write down your rules. You can have these or whatever you want to do. Make them, change them, have your own. But you know, the truth. You know, what we need to do is like have rules. Put them in our heart, memorize them, practice them, so that they become second nature. Don't change the rules. Obviously, you know, if you need to change the rules, okay, but you know what I'm saying. But have some solid foundational rules. Like for example, you know, obviously God is perfect, but when He gave the 10 Commandments, I mean, He didn't change them. Obviously, He's God, so He can do it right the first time, right? And He does do it right. He did do it right the first time. So what I'm saying is, He never changed. Those 10 Commandments never changed. 4,000 years ago, I think, was when he wrote them, or I don't know, it was six. I'm not sure how long ago. I think it was 4,000 years ago, but they haven't changed. They're the same today as they were back then, and that's how we need to think of our trading rules. They need to be in stone, set in stone. Obviously, you know, we're not God, we're not perfect, so we might not get the rules exactly perfect like the first time, right? But you know, it should be pretty close, and you know, we can change them as we go. But we need to you know, if you have to work on them to get them to a point where they're concrete and good and reliable and what you need and what works, right? But once you do that, man, set those things in stone. Have them, follow them, know them, learn them, teach them, you know, and use them and you know, so yeah. So anyway, that's all I gotta say about that. This video is over 26 minutes long. But yeah, I didn't mean for the video to be that long, but thanks if you watched the whole thing. Hopefully it helps you. I made this video to help myself, but you know, obviously also it'd be great if it helps someone else. So anyways, all right, cool. Well, thanks for watching, and have a great day. And that's the best smile I can do. So there you go. And yeah, thanks for watching. I'm Blake, aka Forex Money Flipper, with 10 Talents Trading. Thanks so much. Have a great day.